Making money as a trader nowadays has actually never been easier. You have access to the best brokers, you have access to the most profitable financial products. There is education literally everywhere, and receiving money as a profitable trader has never been easier. We are living in a perfect environment when, if you are a profitable trader, scaling your trading account is actually very simple and you can make a lot of money in a short period of time. If you look at the stats, however, you can see that almost every trading platform states that 95% of people are losing money. 95 out of 100 people have less money at the end of each trading month, and they are basically providing the other profitable 5% with a lot of money. 95% of people are giving in every single month, while the other 5% are only receiving. But how exactly is this even possible? Over the past 5 years of my trading journey, I've realized that there are exactly 3 factors which determine whether you are a profitable trader, whether you are not a profitable trader and have the chance to become a profitable trader, or whether you will simply be a losing trader in the markets for the rest of your life. Those 3 aspects can simply be broken down into: first, your emotions as a trader; second, your focus as a trader; and third, your style as a trader. While emotions and focus are very subjective and they differ from individual to individual, it's very difficult to actually have an objective view about emotions and focus. However, when it comes to your trading style, this is something which is extremely objective, and if you measure your parameters, you can simply look at your trading journal at the end of each month and determine whether the trading strategy which you used over the past month, the risk management, your entry styles and your exit styles actually made you money. If we then go back and look at the statistics closely and we read through the details, you can basically see that those statistics are always only referring to day traders. Those statistics are not stating that 95% of all traders are losing money. They are only referring to the people who are trading the smaller time frames, the 1 minute, the 5 minute and the 10 minute. 95% of those people are on a regular basis losing money. Other statistics then even show us that the longer you actually hold a trade, the higher the chance that you can close out this trade in profit. Overall, we have 2 types of trading which we have to look at. On the one side, we have day trading, trading the smaller time frames, trying to make a lot of money in a short period of time, using a lot of trading capital and leverage, trying to extract major moves and capitalize on very tiny moves, tiny swings within one major market cycle. On the other side, we have swing trading, which does not require a lot of trading capital, which can be done basically using all the higher time frames. You are staying in trades for much longer and you're always trying to capitalize on major market moves. When I first started trading back in 2019, of course, as most of the traders do, I was first paying attention to day trading. I wanted to get rich quick. I wanted to make a lot of money in a short period of time. I wanted to look at the charts for multiple hours every single day, and I simply wanted to use high leverage. Over the first couple of months though, I realized that I was simply losing money every single month. At the beginning of each month, I was depositing new trading capital into my trading account. Unfortunately, I did not have a trading journal back then, so I was basically not measuring my metrics. But at the end of each month, I looked at my trading account and I was always left with nothing. Day trading did simply not work for me, although I followed all of the rules which I was taught in YouTube videos, which I learned from courses, but in the end, I lost money. This is when I then started looking at the higher time frames, and over time, my trading went from losing money every single month to having break-even months and even winning months, and finishing one entire trading year actually in profit. This is when I realized that the type of swing trading which you're actually applying does not matter whatsoever, but what's important is that you simply keep paying attention to the higher time frames. If we start looking at the advantages of swing trading and trading the higher time frames in general, first of all, you have to use less trading capital. You simply need to spend less time looking at charts, and your focus can be on making money apart from trading and using that money to grow your trading account. It is also important to mention that if you're trading the higher time frames, you're not really emotionally attached to one single trade, because it takes a lot of time for this one single trade to play out, and therefore therefore you're not having those crazy ups and downs within a couple of seconds, which make you feel like everything is now on the line. In the end, trading the higher time frames just leads to a more consistent trading outcome, and if you have a profitable trading strategy, this means that you're starting to see positive returns month after month after month. To further illustrate this, let me quickly show you one example right here on TradingView. As you can see, I am looking at the chart of Nvidia. If we're looking at the time frame, you can see I'm looking at the monthly time frame, meaning that every single one of those candles is representing 1 month of price action. If you've been following me for quite some time, you know that I first like to determine the overall trend, which on Nvidia of course is clearly towards the upside, and the second step is then looking at major support and resistance levels. On Nvidia, it's actually quite simple and straightforward. First of all, we do have this lower support trend line, and on the other side, if we simply duplicate this level, you can see we do have this upper resistance trend line, and Nvidia was back then simply forming a rising channel formation. From here, let's quickly head to the replay section and start the replay in the beginning of 2023, because this is also one of the trades which we took in the elite program. Situation on Nvidia back then was pretty simple. We had our horizontal structure at $12, and we also had this ascending support trend line, which means that right here at this $12 level we had a confluence of support. Then I was simply going down on the smaller time frames, waiting for bullish confirmation, indicating a bullish reversal on Nvidia. We saw this bullish confirmation, and I simply decided to enter a long position. My stop in this case was simply below the previous low, because if Nvidia actually breaks below this confluence of support, of course I want to close my trade for a loss. I was back then targeting the previous highs, which I thought was quite reasonable, considering that if Nvidia comes back to the previous highs, this is already a move of 120% towards the upside. Fasting forward the next couple of candles, you can see what happened. Nvidia from here was basically melting towards the upside after creating some back and forth, and eventually then retesting the previous high, which back then was roughly at this $33 level. Overall, this was a profitable trade with a decent risk to reward ratio of a 1:3. If we look at the time which this trade actually took to play out, you can see that I entered this trade in November of 2022, and I actually closed out this trade roughly 180 days later in May of 2023, meaning that for 6 months I stayed in one single trade. However, if we objectively look at this situation, you can see it was pretty simple and straightforward. I just drew basically 2 lines, a confluence of support, was looking at price action on the smaller time frames, and then I simply decided to enter a long position to capitalize on a clear continuation towards the upside. If we now, vice versa, actually start looking at smaller time frames, let me quickly remove all of the drawings and exit the replay mode, and let's just say, as most day traders do, we look at the 1-minute time frame. You can see that even on a stock like Nvidia, the 1-minute time frame is a lot of back and forth. Let's zoom out, and you can see that we do not have clear trends. We are in an uptrend, then we are once again back to a downtrend. Now over the past couple of days we are back in an uptrend, back to a downtrend. You can see that if you're trying to trade the smaller time frames, we also have a lot of gaps, meaning that those are areas which you can actually not trade. You can see right now Nvidia is pre-market down already 1.5%, and you can simply not protect your position properly if you're trying to trade the smaller time frames. Emotions are also very active when you're trading the smaller time frames. If you enter a position, the next 2 minutes you can be in a massive profit, then it can actually come back to break even immediately, melt again into a crazy profit. You're thinking that you're now printing a lot of money. When then Nvidia reverses, comes back to break even, maybe stops you out for a loss. You can see it's a lot of back and forth, also with emotions in a very short period of time. I think with this example, it becomes obvious that trading the higher time frames is more relaxing, overall also more rewarding. You have less emotions involved in your trading, and you simply start to become a more consistent trader. As you can see, swing trading is clearly profitable. Swing trading is a lot easier than day trading, and the statistics just show that day trading over a long period of time is not very likely to actually make you money. Trading in general is all about probabilities playing out over a long time horizon. And why would you actually go ahead and start day trading when the odds are already not in your favor. Swing trading is the way to go, and if you're not a profitable trader yet and you are trading the smaller time frames, just go and start implementing what I told you in this video. Switch from trading the smaller time frames to trading the higher time frames. Give it a couple of months and you can see that you will finally start making money. If you are already a swing trader, congratulations, you are on the right path, and if you now have your emotions and your focus in place, there is nothing stopping you from becoming a consistently profitable trader. Let me actually know your opinion about swing trading versus day trading in the comment section down below. I know it's a very controversial topic, but I just want to see how much of you guys are actually already implementing the profitable swing trading plan. If you enjoyed today's video, I really appreciate if you also smash that like button below. I will see you next week with a fresh video. When it comes to trading, swing trading, and trading the higher time frames in general, it's always important that you remember to keep your long-term vision.